Hi everyone, welcome back to the audit and attestation class. In this class of specific procedure to obtain sufficient appropriate evidence, we'll be covering the major topic which is called external confirmation procedure. And then we do some practice question. So let's dive into to understand more about external confirmation procedure.
So jumping on the last topic for this weekend, external confirmation, right? I know like we have discussed ton of time about the external confirmation. Let's conclude it really quick and maybe it can save some of your time for today class as well. So external confirmation, it can be bank confirmation, it can be cash confirmation, receivable confirmation, payable, inventory lying with third party, litigations, claims, assessments, or sometime you take the confirmation for terms of the agreement as well with the customer or supplier, right? This is a kind of inquiry which you do from directly to the third party, and you request the third party to directly give you the confirmation without involving client in between, right? Confirmation is generally considered as a more reliable evidence. It addresses one or more of the following financial statement assertion. So financial statement assertion, existence, that inventory is lying with the third party, right? If the third party is giving you confirmation, yes, the inventory of that particular company is lying with us, and this much is the quantity and this much is the value. So it will give you the it will give you the comfort over the existence of inventory, right? And the completeness as well as rights and obligation. So one confirmation can serve the multiple purpose or multiple assertions. Second is occurrence, sales, purchases, right? So when you take the confirmation from the customer about the terms of agreement, like X work, X chip, so that give you the you can say confirmation, or you can say that helps in satisfying the occurrence assertion as well when you need to recognize the revenue for this respective sales. Completeness, like we discussed about inventory confirmation, account receivable confirmation. If you receive the confirmation from the customer about the account receivable balance, so it will give you the confirmation on the completeness and accuracy both, right? It also give you the it also satisfies the rights of the company from the customer to recover the money, right? And if you are taking the confirmation from the bank or from the lender, so it will give you the confirmation, will give you satisfy the assertion of existence of the borrowing as well as completeness of the borrowings, and the obligation assertion as well, which the company is obliged to pay to the respective lenders, right? Valuation and management. For example, if you're taking inventory confirmation, borrowing confirmation, receivable confirmation, right? Or legal confirmation, bank confirmation, it gives you the confirmation over the valuation and measure, not management. Sorry, my bad. Right? Same way, presentation and disclosure. If you take the confirmation on borrowings, so there are certain terms which are mandatory required to be disclosed in the notes to accounts. So you get the confirmation on that as well. That is like rate of interest on borrowing, terms of the agreement with the customer, asset if there is any only. So those require additional disclosure in the notes to accounts, right? So that satisfy the presentation and disclosure assertion as well. So one confirmation can serve the multiple assertion. Make sense? Yes. Now, what is the confirmation process? First is selecting the item for which you need to request for the confirmation. Maybe your customer, your supplier, your banks, your lawyers, your lenders, right? First and foremost important thing is identification and selection of the sample. Second is designing the confirmation request. So what request you are making to the customer would not be same what request you are making to the lawyer, right? For the lawyer, you might be drafting different request letter, right? For the litigation, claims and assessment. For the customer, you are requesting the balance confirmation, right? For the banker, you might be requesting for the banking, FDs, non-recurring deposit, investments, or maybe like borrowings. So that each request is a different template form or request, right? So second thing is, first is identification of sample. Second is designing the request letter for them. Third is sending those requests to the third party for the confirmation. Fourth step is obtaining the response. And lastly, evaluating the response. Is those response is reconciling with your financial statement or not? If not reconciling, then investigate the difference. Make sense? How many of you have done this confirmation process?
Yes, sir. I'm done.
Right. Do you mind sharing any of your experience, or is it what we are discussing here is time to your experience?
Yes, sir. I mean, I've done legal confirmations, I've done cash confirmations, I've done AR confirmations. So earlier, we used to do those hard coded or hard copy one wherein you fill in a paper, you fill in the details, and then you put it in an envelope, and then that gets rolled out. So I've done that piece, but now a lot of that is done automatically, or through emails when you're sending PDFs, they sign it, send it back to you, or they would, you will send it to confirmation.com for let's say bank confirmation, investment confirmations. And then you also have positive confirmations and negative confirmations. So, all those things.
Yeah, very good. Thanks, Kush, for sharing your experience. So what are the type of confirmation? There are two type of confirmation: positive confirmation and negative confirmation. Anyone have idea what is positive confirmation or what is negative confirmation? Any rough idea?
So in the positive confirmation, we ask them to confirm back the balance. In the negative confirmation, we say that if you disagree with this, then you just let us know.
Yeah,
so the only problem with negative, I don't know, I mean, that's not the question, but if we send out negative confirmation, the problem is that if we are not getting a confirmation back, that doesn't mean that the customer is agreeing to that balance. That's the only risk out there. So that's it.
Yeah, so let's look at right hand side first. Negative confirmation. In a negative confirmation, recipient is requested to respond only if he and she disagree with the information stated in the request letter. For example, we are sending a confirmation request to the customers, right? We have mentioned, let's say your $10,000 is due on you from the customer side. If you disagree, then respond to us. Otherwise, we will assume that 10,000 is being due to you. Make sense? That kind of request letter will be sending to the customer, right? But customer do not respond. So we as an auditor is assuming that customer is agreeing to it, that 10,000 is due. So negative confirmation, when you are using, when you can use the negative confirmation, and what is the risk involved in the negative confirmation. So you can use the negative confirmation only when the risk of material misstatement is low. If the risk of material misstatement is moderate, high, or fraud risk or significant risk is being involved, then you cannot send the negative confirmation. Second is when there is large number of small balances. So there's no much key items, more of like homogeneous kind of transaction. And low expectation rate. That means you will not be receiving much confirmation back, right? And the auditor has no reason to believe that the recipient of the request are unlikely to give them a consideration, give them a confirmation. Sorry. In that case only, you will be sending the negative confirmation, and negative confirmation provide low level of assurance. It does not provide high level of assurance or moderate level of assurance. It provides low level of assurance. So negative confirmation, when you are using, you can use only and only when the risk is identified as a low. So generally in account payable. So there are huge number of suppliers and vendors, right? And the risk is generally low in account payable unless and until there is any fraud risk. Otherwise, generally, I have not seen much in my experience that we can give significant or high risk area to the account payable. So to them, we can send a negative balance confirmation if we want to. Positive confirmation. So I understood what is negative confirmation and when we can send the negative confirmation.
Yes, sir.
Right? And this provides low level of assurance. When we do not need high level of assurance, then we will be sending the negative confirmation. Now coming to the positive confirmation. for litigations, claims, assessment, significant matter, high risk area. So it's mandatory to send the positive confirmation. You cannot send the negative confirmation in those areas. So there are two types of positive confirmation as well. One is with amount, the another is without amount, blank confirmation. First one is with amount or tenure, required the confirmation. So in this, you will be writing like $10,000 is due to you from these many days. You can send this confirmation. Request you to please confirm the balance due, right? So then you'll be asking, you'll be sending the details along with the amount to the customer to send you back his response, his or her response. So either he or she agree, or he or she disagree, but it's required for them to respond to you. That is a positive confirmation. So here the risk is that the amount or terms are printed on the confirmation and recipient merely sign without verifying the information is correct. So in this case, when you are putting the amount or terms of the period, so the risk is that the recipient, like your customer, will just merely sign. He or she will not read the amount and the terms which you have mentioned. So that is the risk with this type of positive confirmation. Second type of positive confirmation is a blank confirmation, where you ask recipient to fill the balances, terms, and tenures. So here, generally like bank confirmation, or you can say significant customer confirmation, we send a blank confirmation and we request them to fill the balance in their account due for the company, or bank account balance is lying with the respective bank, or FD balance or borrowings balances, right? Here the risk is that it provides a greater degree of assurance, but there is a higher probability that it will not return because additional effort required from the customer, from the vendor, or from the banker, because he need to check his accounts. He or she need to ask his accountant or the respective person to look at your account balance. But sometimes if their accounting is not appropriate, they may feel not comfortable sending it back to you, right? So return rate, confirmation rate is generally low in the blank confirmation. That is the risk, right? Makes sense? First, positive confirmation, where you are putting the information. There the risk is that like customer or bankers or maybe vendors will merely just sign without reconciling the amount with their books. But in second case, risk is that he need to check his books of accounts. His books of account may not be properly maintained by their accountant, right? And he need to check and put an additional effort, rather than he or she will just ignore it. So your chances of response will be less. So that is the risk in the second type of positive confirmation. But positive confirmation will give you better assurance, will give you more assurance, right? The auditor generally perform the follow-up procedure, that is second or third request of the confirmation, right? Positive confirmation provide high level of assurance. If no response is received, then auditor perform alternative procedure. Alternative procedure include like maybe directly calling to the customer, fax to the customer, take the confirmation over the email, right? If no other ways of confirmation, then test the underlying document like invoices, sales order, purchase order, shipping document, etc. Make sense? Yeah, Kashish, Sanchit, Avneet,
Yes, sir.
Anisha.
Yes, sir.
So this is about like type of confirmation. The auditor should maintain control over the confirmation. So how many confirmation you have ruled out, how many confirmation you have received back, how many confirmation balances you have not received. So for them, you need to send a follow-up request, second request, and then third request, right? If after third request also nothing came back to you, then you need to perform the alternative procedure. All the tracking is being part of audit documentation, which an auditor need to maintain, right? AR confirmation example, auditor should perform AR confirmation unless when you can ignore the AR confirmation. AR confirmation is generally a mandatory procedure, but there are exceptions to the general rule when AR balances are immaterial, right? When using of confirmation is ineffective and risk of material misstatement is low. Auditor should document the rationale if they are planning not to use the confirmation procedure for a year. Make sense? Yes, no, Christopher?
Yes, sir.
So this is all about confirmation procedure. Let's do some question. Question number 1. Negative confirmation of account receivable is less appropriate than positive confirmation of account receivable balance. Why? First one is, some recipient may report incorrect balance that require extensive follow. What is the call of the question? Negative confirmation is less appropriate than the positive, right? What is negative confirmation?
So the recipient or the customer should only reply back if they disagree with the balance. So that's why
first,
option 3 is
if you
correct.
see the first point, so that does not fit into it. So you,
Yes, sir.
right, it's completely outright. Second point, a majority of recipients usually lack the willingness to respond objectively. So when majority of the recipient lack the willingness of respond objectively, when it is
it's a blank
confirmation, blank type, right? Third is, the auditor cannot infer that all non-respondent have verified their account information. Fourth is, negative confirmation do not produce audit evidence that is statistically quantifiable. So what is the call of the question? You know, sometime when you read different option, you missed what was the call of the question, right? What is the call of the question here? Negative confirmation is less appropriate than positive confirmation since, or you can say when the auditor cannot infer that all non-respondent have verified their account information.
But Kamal, अगर हम ये कह रहे हैं that's the answer, वो disagree तो तभी करेंगे ना जब they have verified their information. How will they otherwise disagree?
Yeah, so for their verification they need to go with the positive confirmation.
नहीं. What I'm trying to say is the point says the auditor cannot infer that all the non-correspondents have verified their non-respondents. मुझे clear नहीं हो रहा. Sorry, let me think it through.
I know. So it says the auditor cannot infer that all non-respondent have verified their account information. In that case,
अच्छा हाँ ठीक है. That's clear, because someone will respond only when they disagree with the information. But if someone doesn't respond, how do you verify कि उसने actually check किया है कि नहीं? ठीक है, got it.
Right? Everyone agree to it? Yeah, Kashish, Kush, Sanchit.
Yes, sir.
Cool. So last question of the day, the appropriateness of the standard bank confirmation requests may be restricted since the bank employee who complete the form may 1, 2, 3, 4. What is the call of the question? The appropriateness of a standard bank confirmation request may be restricted since the bank employee who complete the form may first be unaware of all the financial relationship that the bank has with the client, not believe that the bank is obligated to verify the confidential information to third party, sign and return the form without inspecting the accuracy of the client bank reconciliation, not have access to the client cutoff bank statement. Did you understand what is the call of the question? What is the call of the question here? The appropriateness of the standard bank confirmation request which you are sending to the bank may be restricted since the bank employee who complete the form may, if you go to the fourth one, not have access to the client cutoff. Bank person may never be have the cutoff access, right? Makes sense? So this fourth one is ruled out.
Yes, sir.
Right? Third one is bank person sign and return the form without inspecting the accuracy of the client bank reconciliation. So bank person has nothing to do with bank reconciliation. So third one is also ruled out, right? Yeah, Nimisha, Kush, Sachin, Jaspreet, Ashish. Make sense? Why third one is ruled out?
Yes, sir.
Yes, sir. Yes, sir.
Okay, so second one, the bank person not believe that the bank is obliged to verify the confidential information to a third party, whereas the request is being approved by the management. So banker is obliged to provide the confirmation. So second, third, and fourth is ruled out. Now, call of the question is what? Restrict may be restricted since the bank employee who complete the form may be unaware of all financial relationship. That can be true, right? Maybe you have sent the confirmation to the bank, but the employee of the bank who is giving back the confirmation might not be aware of that if you have borrowings with the banks. Maybe you have like overdraft limit with the bank. Maybe you have some lending provision with the bank. So that could be possible.
तो सर वो तो बैंकर को पता लग ही जाएगा ना कि
right nowadays like it's all on CBS, centralized banking, right? But in earlier days, like there were different departments. Loan department was different, FD department was different, banking department was different. But nowadays it's all in a click of button. So it's maybe like old question.
But sir, the question is saying like bank confirmation was maybe restricted since the bank if
yeah, restricted only like for restricted maybe like that bank person knows like bank balance, fixed deposit, recurring deposit, but he might not be knowing like you have any lending relation, OD relation, and other relation, because that's a different department.
Okay.
So he may not give you the confirmation. He may miss to give you that confirmation. Make sense?
Yes.
Cool. So this is it for the today's
सर
class.
एक बार फर्स्ट वाला भी समझा दो सर वो क्लियर नहीं हुआ फर्स्ट वाला
Yeah, Nimisha, do you mind explaining this to Kashish? Negative confirmation of account receivable is less appropriate than the positive confirmation since the auditor.
Because, sorry.
Yeah,
Okay, go
yeah,
ahead. Okay.
Since the auditor
Negative-
cannot infer that all non-respondent have verified their account information. Yes, go ahead.
So negative confirmations may you receive a reply from the confirming party only when they disagree to some information. If they agree to some information, they do not need to respond. Now, in this case, the third option says that the auditor cannot infer that all non-respondents have verified their account information. So what it is trying to say is, अगर कोई respond नहीं कर रहा, so how can you verify? तो आप तो यही assume करोगे ना कि वो agree कर रहा है उसके साथ. तो how can you verify कि उसने actually वो information verify की है कि नहीं before deciding to not respond to your confirmation?
Yeah, that is the reason why negative confirmation is less appropriate than the positive confirmation.
क्योंकि पॉजिटिव कंफर्मेशन में तो सर जैसे रिस्क
He
ज्यादा
has to
इन्वॉल्व होता है तो
respond
उसमें
to it.
कंफर्मेशन देनी पड़ेगी.
Yes. That is the reason negative confirmation is less appropriate than the positive one.
Okay, got it.
Right, this kind of language you can expect in your exam.
सर वो लैंग्वेज ही नहीं समझ आई बाकी तो.
Yeah, I know. I got it. Cool. Okay, so I think we are good for today class. Enjoy rest of your Sunday, and next week Saturday we do not have class, but Sunday we'll be having class. Right, we'll be continuing with this, but request you all, we are done with almost half of the chapter 4. So please do the practice of all the multiple choice question relating to chapter 4 at least, right? And try some simulation as well. Cool. See you on next Sunday, man.
Thank you, sir.
Thank you so much.
Thank you.
Bye-bye.